What's going on, everyone? Welcome back to this multi-time frame forecast. We're going to be going over oil for this particular video. Now, before we get started, I want you guys to do one thing, and that's just like this idea. Not only does it support us, but it really does give others the opportunity to learn from the videos and also potentially gain some pips as well. So within the last week, we've already done over 400 pips. Last month, closing over 5,000 pips. So the videos that we're doing here for free are only a fraction of the pips that we have been generating over the last couple of years. And that being said, if you're interested in learning more on how to read chart analysis, continue watching these videos, message us privately. And if you're interested in learning how to take away the same number of pips that we've been generating for the last couple of years, feel free to message us as well. We'd be more than happy to talk to you personally. That being said, we can get straight into it. So this is oil. If you guys have been following for a couple of months, you know that we've already marked this up earlier this year, and not much has really changed since. And what we're looking at right here is, as always, on the monthly time frame, we went to the line chart looking at critical areas of structure where price was at, in addition to getting this previous all-time low. So that's where these areas of structure come into play. We went back to the line chart, or to the candlestick chart, looking at some particular patterns. Nothing too interesting other than a major impulsive pattern to the downside, which is telling us that we needed a retracement. One already occurred, and two, potentially looking for another push downward as well. So that's where we're at currently. Now we went down to the weekly time frame, or let's go back up here real quick. And the reason why we had picked this area out was because it aligned perfectly with this 61 fib and structure as well, like a dead on perfect. But you can see that we started getting some resistance at the 50% level. So let's just take this 50% level real quick and show you what that was aligning with. So not too much structure right here. You can see tested support here. But oops. But if we went down to the weekly time frame, you can see that there was something interesting going on with this 50% structure right here. So that's why we had marked it up. And on the daily time frame, what we had seen was this area of resistance, turn support, turn support, turn support, turn support, potentially turning resistance once more, since it was in fact a critical area of structure, aligning with a critical Fibonacci level, which is being respected several different times as support. Now, we did break through several times as well, which is telling us that we had some bearish momentum coming our way, and now we're trading below it. We did close a pattern. It's a very weak harmonic pattern, in my opinion. But we did close a pattern, which is why we got to push upwards as well. But now we are just about ready to test this area of structure once more. And hopefully we can actually test it as resistance. And that would allow us to finally get in on this trade that we've been waiting on for the last couple of months. So this is what we're going to be looking at, essentially. So we got TP1, which is just this area of structure. And then TP2, which would be this extension. And we can do that as well. So we'll actually move this one here just to make it easier for us. TP2 will have the same entry condition and the same stop. The only real significant difference is going to be the take profit, hence TP2. So right here, we have a safer, more likely scenario, which is to test this previous all-time low as support. However, at that point, you would already be at a break-even position, so you can just manually move your stop losses and your take profits to go as far as the price will allow you to go, scraping away as many pips as possible. So this is really straightforward, using basic structure, basic fibs, and an impulsive pattern to the downside to allow us to determine whether or not we were going to enter this particular trade. We see that we were not only testing a critical area of structure on the daily time frame, but it also aligned beautifully with the 50% fib of the previous leg on the weekly and monthly time frame as well. Excuse me, monthly time frame. So we can actually mark that up right here. We will do this. 50%, and then we'll do structure on the daily. We're just waiting to test it as support. or excuse me, as resistance. And then once we test it as resistance and that's confirmed, we're going to be waiting for structure to change for bearish momentum and bearish sentiment using our scripts that we had created. Once again, if you want to use the same scripts that we had created to help you identify whether or not price is in fact in a bearish or bullish environment, feel free to message us as well. It's another tool that we created for you guys to use for absolutely free. And you can see right here, we just transitioned into a green hue, which is telling us that we are in fact transitioning back to some bullish momentum, which is to be expected. However, if we can continue to hold this position as resistance, then we would see this area, assuming it breaks for lower lows and lower highs and the EMAs cross back over, to a bearish environment. Now, if that's the case, then we can actually get in on this trade and execute. But until then, we're going to be waiting for the next couple of days for price to basically consolidate and give us a confirmation that is valid for us to enter. Until then, we are just patiently waiting. And this is, once again, oil. And like I said, if you guys are following along and find this educational, great. Don't forget to like this idea and comment other pairs you want us to cover down below and share if you can. And if you're interested in scraping away the same amount of pips that we've been taking away each and every single month, feel free to message us as well. We'd be happy to talk to you, walk you through things, and give you some educational tips as well. So this is Oil once again, and I'll see you guys in the next video. Bye.